means it's very hard to place the actual price in
You're
the
live.
document. Okay, welcome everybody to your May 21st, 2020 Trade Alert for Pro members. Today we're taking profits on our VXX put options. Those profits snuck away with us over the last 48 hours. We had as high of a 50% return. At the time I closed it out, it was just over a 10% and 20% profit. And so if everybody could let us know what you're making on your VIX trades, we would love to see that. As well as what you get on your new fills. Tyler Garrison says China targets Hong Kong's autonomy after the pro-democracy uprising. Yeah, so China's trying to pass a national security act that'll allow them to really take advantage of those little Hong Kongers. We'll be focusing on that in the boot camp today. Part 2 of our boot camp, we'll be looking at how to short the Hong Kong dollar as well as short the Chinese yuan as two bonus trades that are very attractive. Potential 100-to-1 return shorting the Hong Kong dollar, and then more of a bread and butter trade, but with still triple-digit potential returns shorting the Chinese currency. And that's a trade we can be doing for literally the next several decades, whereas the Hong Kong trade's really a once in a lifetime opportunity for them to de-peg. Jeff Olson says he got a 50% profit a few days ago. He sold early. Way to go. Ben says he's down slightly on his VIX puts because he took the trade a little late. Should I still close them today? Yes, Ben. Unfortunately, my canary in the coal mine isn't dead yet, but it is having some struggle today. We'll take a look at the pretty... Tyler pulled a 30% profit on his VIX puts. Very good. Let me know what you guys get filled for the next portion of the trade. So the next part is to double down on the FXI put options. So prior we had 10 put options per 75,000, which was just about a 1%, just over a 1% total portfolio position. We were down on that slightly. It started off at about $1. I believe it's trading around 75 cents currently, maybe a little higher. So we've doubled down on that play. So this is my single favorite trade, is shorting FXI, because it does look like America is going to force Chinese equities out of our markets and pull capital out. And again, we'll be talking about that in great detail in part 2 of the US-China trade war series for boot camp members, which comes on at 1 Eastern today.
3 Eastern.
3 Eastern, 1 Mountain Standard. Thanks, Ryan. So let us know if you are selling your VIX puts, if you made a profit. I just want to make sure we're all getting close to the same results. And Karen, are you ready to go all in on stocks today or what? Just teasing you, Karen. I think you're going to be a happy camper here, but I know you keep me on my toes, so good for you. Yes, that's correct, Rick. If you had 10, double down. I'm not a big blackjack player, but this is a hand we want to double down on here. So with FXI, the best results would be the trade war escalates and we literally delist FXI. And so that would mean you're going to walk away with $31 times 100 shares because of your long put option contract, and you're going to lose the option premium. So if we have just over 2% of our total net worth in this trade and it is delisted, you're going to end up with a 60% total return while risking 2% of your capital. Now that'd be the ultimate return. That may be a 2021. Karen says, careful, I can still come get you and spank you. Where's, I'm not sure if Oscar's on today or not. He was texting me this morning. Okay, so Karen jumped the gun. Well, you're giving me conflicting news here, Karen. So you sold your upside hedge early and then emailed me saying you wanted to buy stocks yesterday. I'm just teasing you. Maybe today's the best day to buy stocks. We'll see what the Fed has for us this evening. I'm just teasing you, Karen. Oh, Oscar says giddy up on the spanking. Ben, yeah, go ahead. What's your question? So the last trade is to lock in your profits on GDX. We're not going to be selling the other 821 GDX put, which is a 28 strike. We're essentially doubling down on the puts on GDX. I wish I'd done this yesterday, but unfortunately, we could have locked in an extra $2 of profits. Nope, I'm open for all critiques, Karen. You know that. I'm just giving you a hard time. But there's really only two trades. There's either your long bonds or your long stocks. And so the general email you got was one of which was wanting to dump the bonds and missing out on the stocks, which I know we all have that feeling. However, I'm highly confident that is the absolute wrong move to make right now. Marlene says GDX puts for the 30,000 portfolio. No, so that's only for pro to protect and lock in your GDX position. So we were up to 37 on GDX, and we are locking in as much of that as we can. Pat saying, what are the indicators? That's giving me a heads up. So yeah, I'm looking at weaker markets that the big boys know will fall before the bigger market for weakness. And so that's been my best leading indicator, at least for predicting short-term volatility. Ben, let's go ahead and type it out for now. Jack, yeah, we're selling both VXX put options today. Correct. Michael says for GDX, is it 4 per 75,000? Rick says, okay, so Michael, yes, it's 4 per 75,000, and you're going to hold on to your other set of GDX put options. Rick says, are the put options coming in at 84 cents? Yes. That sounds about right. It's bouncing between 70 and 90 cents this morning. And when I originally put the trade out, it was around $1. So that position's down slightly from the original. And again, we're doubling down on these put options. So I think Karen and Mark have both had good critiques. Why did we give up the balanced portfolio that has the half stock, half bond strategy? Because obviously that would have made a lot of money during this period of volatility. So that's a good question. And I'll address that as best as I can during our webinar today. A good critique, and hindsight, sure, that would have been very handy over the last month and a half. However, it would not have been handy from February through March. And I do believe it will not be a handy strategy for the remainder of the year either. So Tyler says that there are 8 GDX put options at 2 strikes per 75,000. Correct. And you're still long GDX if you're an original member. So great question. Kathy says she sold to close the 529 and got 93 cents, made 20 cents a share. And the 6531 VXX put, she got $1.16 and made 25 cents a share. Okay, very good. Did better than I did. Okay, Karen. Well, we'll miss you, and we'll. Did you get your trades in? And I want to remind everybody, Mark Stoley, who made a fortune with this, was giving me the hardest time in January and February, and then hit a jackpot because I kept telling him just to stay put. So I'm trying to do that again with everybody this period. Noticed our audience tends to not like drawdown for even a minute. So I feel you, but sometimes you have to be patient. Oh, Karen already doubled down on FXI. Very good. Okay, Michael says he got filled on the 529 for 91 cents. So he probably made about 10 or 15 cents a share on that contract. And on the 625 $1.17, got his FXI puts for 85 cents and GDX for 311. Very good. Okay, Ben says he feels like he's a little confused. So I joined the program Monday evening and started mirroring the pro positions on Tuesday. The thing is that I made a mistake on trying to buy some of the options on limit versus market orders, so the SPY puts did not fill, and on Wednesday it seemed like they switched to hold position, so I'm not sure if I should still initiate them with market orders. Great question, and I think that was another good critique of Karen's, is that we went from selling covered calls on the SPY Monday, Wednesday, Friday like clockwork, and the trades were what I was calling self-destruct. So every position was open and closed at every single trade alert, which made it very easy for everyone to get the exact same results. And that's very good when you have that stock bond strategy and you don't have the economy falling off a cliff. So the environment in 2020 is much different than 2019. And it's much easier to help you guys make a profit with this model, where I simply put up the positions. We're going to get different fills depending on when we've exactly entered, but we're predicting big moves in the market and getting everybody out at the same time. And so as long as you're following real time, you'll get very close to my result. If you're joining in a little later, then you're going to have slightly different results. And so we've had it both ways. Some people are coming in and getting a little worse price. Some people are coming in and getting a much better price. So Ben, yeah, those SPY puts, I will put them back on the board when there's an opportune time. I try not to do too much trading on any single day so that people can easily follow the program. But I would say that for now, if you miss those SPY puts, just wait and wait for me to put those back on an active trade. But I will say I'm very close to putting them back on the active trade list. So if you're feeling like you want to have those positions and you just didn't get filled, you may not see a better price on those than you do right now. And that's right now, my leading indicator is flashing orange, not red. So that may not be the case. And I'll go over the total set of positions you can have right now, Ben. Karen says she doesn't like her 98% drawdown on the June SPY put. No, I feel you, Karen. Okay, Ben says, so once I have my spreadsheet filled out, can I request a review of them to ensure I'm current with your strategic holdings? Yeah, in the boot camp, I do that sort of one-on-one work with clients. So I'm not sure if you're in the boot camp, Ben. I think you probably have a trial to it at least. So this week we're doing a 2-hour, or today we're doing a big presentation on China and making sure everybody has that trade ready to lock down. But a lot of the time we spend entire training sessions learning how to fill out our spreadsheet. Okay, great, Ben. Yeah, I'll try to, if you want to fill out your spreadsheet, watch that video, and I can definitely take a look at it before we do the big presentation, as long as we don't have too much questions. So maybe next week we can go back to a uh, spreadsheet tutorial. Dixon says, what's the GDX ratio of puts to calls? So now you're up to 2 puts for 100 shares on GDX is what we have right now. Gary says he got 90 cents on the 529 and $1.15 on the 6.5 VXX. And he got his FXI at 85 cents and his GDX at 311. Very good, Gary. Thanks for reporting those numbers. Oh, Rick paid more than Gary, extra 4 cents. I'm just teasing you, Rick. That's a good price. Now, Rick, do you have the GDX? Michael's wondering where the written cheat sheet is that I've been promising. I haven't written it, but that tutorial video is pretty good. So I do need to get the cheat sheet written up with the video tutorial. But I think that video tutorial is pretty darn good. But yes, I owe you guys that as soon as possible. Tyler says, why is Yang less attractive than FXI? You know, it's interesting. Bloomberg, who we know loves China, has a lot of money in China, was bashing Chinese companies with some interview yesterday. It's on my Twitter feed. And they're asking, you know, what percentage of Chinese companies do you think report bogus sales? And the guy chuckled and it said probably all of them. And he went to the degree of you know, it's if you don't report at least 30% fake data in terms of sales, they think you're weak. But the average is between 30 to 50%. They'll start to raise their eyebrows if it goes over 50%. And he goes about to a story about how Jack Ma of Alibaba basically stole Alipay right out of Alibaba and made it his own, and just how corrupt a lot of these, just the legal system in China is set up in such a way that you're really incentivized to lie, cheat, and steal and backstab your way to the top, only so the Communist Party can take over control if you do get somewhere, such as Alibaba. Yang is a good inverse ETF, Tyler, and I believe it's more correlated to FXI. But yeah, I think MCHI, FXI, Yang, these are all really good ways to bet down on the Chinese stock market. Pat has a great story on China. Okay, good. As soon as we get through the trade alert, we'll bring that up. Looks like everybody's getting around 315 on the GDX puts. Karen, what did you get? Rick's in on his FXI at 85. Okay, very good. So let's go ahead and continue through the trade alert. So to summarize, we closed our only upside hedge. We have nothing except for USO and our long GDX position to do well from any sort of bullish inflationary pressures, which I like because GDX is being hyped up over the potential future risk of inflation because of all the money printing. Although I still don't think it'll be able to go up with the stock market going down. So that's why we did lock in the gains on GDX thus far. So for us to derive any profits on GDX, if you're still long GDX, we now need it to pop above 39. So we did lock in the old profits that we have. Oh, nice. Karen locked in. What did you get on your GDX? Did you sell it at 37? Well, I've been talking down GDX for quite a while it was going straight up. So very good sell on that one, Karen. What did you get out at? Do you know? So we have two upside hedges. We have USO and we now have GDX long. But for us to get a profit on GDX, we've essentially locked in all the gains and cut off $3 of our profit by buying that put option today. And if I'm correct, we'll be selling these puts in 2 to 3 months. The key for when to sell is going to watch for that stimulus bill to get passed. Right now, I don't think it'll be passed, and they're going to wait again for chaos. Wait for chaos, do the next massive stimulus bill. So I do think we're going to have to wait for that. And when they do pump it out, it'll be after they've sold this $3 trillion in debt right now. That's going to just punish markets. And don't forget, this is our last free pro webinar. If you're on a trial or a basic membership, just a fair warning, you will only be getting the basic trade alerts. So you'll want to update that today so you can continue to get those updates. And this will give us a little more exclusive time with our Thursday crew. But yes, it does look like the fireworks are getting ready to rip. We'll be looking at all the top news in a moment related to this. But yeah, the month of May has just been extraordinary in how fast we've gone from China's our buddy. And hey, yeah, you did great on that one, Karen. We rode that one up. So now it's time to make the rest of your portfolio, the deflationary portion of your portfolio, pay off. And you've been very patient, and your critique was very fair. So, but my positioning hasn't budged, not even an inch. So I think we're going to do very well. And that's a good point. If you're out trading on your own, you could go do whatever you want. The only person who's going to get in trouble is your own self-conscious. Maybe your partner if they look at your brokerage accounts. With our program, we lose a few percent. In this case, we have a 9% drawdown on those puts. But again, that's 2 years of premium. If I have a drawdown, I get hell from the whole group until that turns around. So that is one nice thing about having to display your results every day, updated live. Even hedge funds don't have to concern their investors with drawdown in the short term. Okay, Oscar's off to work. Okay, Oscar, have a great day. Jeff says this reminds me of 1999 and the 2007. Oh man, I got started in this business at the bottom. Rick says, how long can you hold your breath? Pretty long. But I do the Wim Hof every day, so that helps with that. Yep, cash is a position. Very good point, Karen. Tony says, are you selling the GDX 28 put? Nope. I think we're going to see a huge crash in GDX. And so we're going to sell both those puts in a few months ahead of the stimulus bill. So Tony called me up saying, look, the House has a $3 trillion bill passed. So they passed it, but the Senate's turned it down as predicted. So the QE is coming to an end. The stimulus is coming to an end. And now the bond market is going to punish $3 trillion out of the global economy here. But yeah, Rick, I don't know if you're just talking about the plunge for a crash. Okay. Karen says this doesn't remind me of those crises at all. This is much worse. I agree. Country is way too divided, decades of internal power. The real story is that globalization is over, and that is going to crush the growth of corporations. Forget having 36 million Americans not working, although they're getting paid not to work. So we probably won't see the effects of that until likely August. Okay, Ben got his puts for 86 cents. Jack 10 has it in for 310. Okay, good. All right, great, guys. Let's go ahead and continue into the trade alert. Jeff says, I should say the market reminds me of 99. Yeah, absolutely. Um, so very good insights by everybody. Let's take a look at what's going on. The news flow this morning with anti-China rhetoric is overwhelming and difficult to keep up, even for prolific readers such as myself. 90 days until Huawei is cut off of processor chips. That's really the big thing China is lacking, is the technology that Taiwan, Japan, and America have really focused on. So that's what they're really reliant on. Now, Huawei got big ripping off and stealing technology, and now we're cutting them off. But however, they have plenty of things we need that they can cut us off. So this is very difficult to predict timing, but it is a 90-day warning. China is voting on a National Security Act next Wednesday, and they're supposed to address it tomorrow. So that would be tonight for Americans, regarding Hong Kong that could lead to US revoking the Hong Kong special status. So we were waiting to do our review until the 25th, I believe. And then just so conveniently, China has delayed their decision to the 27th. So we'll see if we're going to delay ours as well. Trump has given the WHO 30 days to reform or lose funding. So we'll see what reform they actually do. It's very interesting to see all the tech backing up the WHO. Bill Gates protecting the WHO, Google, Twitter protecting the WHO, and how much they want to bash things like hydroxychloroquine. Also, what's fascinating is that Trump has hired a vaccine czar who's a board member of Moderna, which is crashing right after they did that. So they raised $1 billion at 75 a share after pumping it at 75 a share. Today it's at 66. I was so close to pulling a short on that Monday because the data they gave us was quite a joke. They have 40, they call it preliminary data. But if they could really create a vaccine to solve the coronavirus, they could essentially stop the common cold. It's never been done. Okay, so Pompeo, the bigger story that might be a more immediate spark is that there's Iranian oil tankers headed to Venezuela, and that is against US sanctions. And now Pompeo's claiming China is smuggling gold from Venezuela to pay for this. So meanwhile, what else is happening? Well, they've got their little dinky fighter jets trying to guard this little fleet of oil coming in, and the U.S. is starting to talk about trying to block that shipment. So this could spark a little feud, or a large feud rather. So that's coming down the pipeline right now, or rather the ocean. NASDAQ is restricting access to Chinese IPOs, but this is more of just sort of NASDAQ makes a lot of money listing Chinese companies. They've got an office in China, and they just put a minimum of 25 million as or I think that's what it was, minimum of a 25 million valued IPO. So they'll just say whatever their company's worth is 25 million. So I think that was really just a headline. Even when China was collapsing in the most recent 2014 through 2016, the NASDAQ sat there with their office and continued to try to stir up business. BlackRock has been attacked multiple angles during the testimony with Powell, which was, Tuesday? One of the senators, can't remember which one, really attacked him for why on earth is BlackRock in charge of this massive equity purchases. Now, BlackRock controls a huge percentage of all equities in the world. They want to get that Chinese capital, and they currently hold over 171 Chinese securities. There's another agency really pushing BlackRock to dump those stocks. So this is not looking good. And again, now 38 million Americans are unemployed. Okay, let's see what else we have coming down here. Okay, Mark says yeah, Mark, you want to have one put option per 100 shares of GDX previously at the 28 strike, and now you're going to have a additional one put option per 100 shares of GDX at the 35 strike. So you'll have a total of 8 put options if you have 400 shares of GDX.
That was 8 put options per 400?
That's right. 4 at the 28 strike and 4 at the 35 strike. Okay, I'm going to no, Ben, I would, if you're not holding GDX, I would buy that 35 put today. Rick says, if you had slightly more than 75, would you buy more SPY puts? Given a bit, if I wanted to get a little extra dicey, Rick, I like that FXI play the most. Or I might put extra capital on the Hong Kong trade because it's, you know, it's a very risk-free trade where you can make a lifetime of returns in a single trade. So I'd probably put extra cash in that Hong Kong trade, especially because you can't lose. You know, you're going to spend 25 cents a day per mini contract to hold the position, and all the right things are happening for Hong Kong to be extremely stressed right now. So that'd probably be a good place to throw an extra $1,000. Ben says the expiration is, what was it, 820? 821? Yeah, so that, so we're shorting all the markets that are inflationary, except for oil, because oil's already down massively. Pat's asking, what's the return on the Hong Kong trade? It depends on the devaluation of the Hong Kong dollar. Right now, it trades at about 13 cents to, is what the cost for one Hong Kong dollar is relative to the US dollar. If that were to go down to about a penny, you would have over a 100 to 1 return. So you would, if you had 1% of your capital and it did go from 13 to a penny, you would double your total net worth. So it's a beautiful trade from that perspective, but the catch is that peg hasn't broken for the better part of 4 decades. So it will take extreme stress. A lot of very high profile billionaire hedge funds have been trying to attack this currency for the last decade with no luck. But again, the magnitude of this crisis and the escalation of the trade war is historic at this moment in time. So I like that trade. It's not a trade I'd say go put all your capital to work because there's just so many other opportunities. That's right, Pat. $1,000 would turn into 100,000 if that happened. There's some risks involved in not getting the full payout. So that's, but yeah, it's a very lucrative trade, and the risk of losing money is really zilch outside of the swap cost. So we can buy a mini contract for 1,000. I'm recommending, well, that's a boot camp trade, so we'll be covering that for 2 hours. If you're not in the boot camp, call up Dean. It's a very detailed 2 trades very correlated. One's betting that the Chinese currency will devalue, and the others that the Hong Kong dollar will devalue. So we'll be spending until that trade pays off. I'm going to be laser focusing our attention on the key prize, as this is really what in terms of pure trade alert value, that's very valuable. Sharky saying, where can I find the Hong Kong trade? We're going to cover that today at 3 Eastern in the boot camp. So that's a boot camp trade. Anytime we're going to trade Forex or futures, it'll be an exclusive boot camp trade because it does require, most of us are not expert futures Forex traders. We typically have good experience with equities and options. But when it goes to futures or Forex, all of a sudden it's it's just not as natural and normal for most of our group. And they're also far more risky. So I want to really have a small group taking that trade with a lot of access to that. Tony says we're buying 4 75K puts in GDX in addition to the 28 puts. That is absolutely correct. Okay, so the relationship with China is getting ugly quickly. But how daring will we get ahead of the election? That's a good question. How daring will China get? What's going on with the trade deal? So we'll be covering that in great detail in the bootcamp webinar coming up. We have a good 2+ hour presentation just to get you caught up with everything that's happened in the last week. And that won't include all the data today. So today I did get a hard copy of the Coronavirus Accountability Act that the Senate just passed, which will give Trump a whole bunch of basically bats to go beat China with. Sharky says, so you're here upselling the boot camp. It's an option, Sharky, and if you just ordered, you have a bonus on the boot camp. So I haven't seen that name prior, but yeah, you do get or is he a trial? Yeah, so the boot camp trade's optional, Sharky. The most similar trade to the Hong Kong trade is this one right here. So the FXI put. I would believe that you would not profit from the Hong Kong trade until after FXI is already put options are going up significantly, and potentially as well the Chinese yuan is devaluing. There's no Forex trade for the Hong Kong trade, Florian. So that's only available in the futures market. It's a very exotic trade that has to be placed at Interactive Brokers. Oh, no, I'm sorry, Florian. Excuse me. The Forex trade you can do at TD Ameritrade in the Thinkorswim platform. It's shorting the Chinese yuan, the offshore currency. That's what we have to do at Interactive Brokers. You're going to need 6,000 in capital at your your Interactive Brokers account to short the Chinese yuan, the offshore yuan, CNH. And that will be good for one contract with plenty of margin. And then over in your TD Ameritrade account, I'm recommending you're going to need about $1,100 plus swap costs to short the Hong Kong dollar. So I had that the exact opposite, Florian. And again, if anybody has any membership, don't forget you get a 30-day free trial to the boot camp. Most of our group does end up getting the boot camp, as it's a weekly webinar that goes indefinitely. It's not, a lot of the competitors I've seen in the training side of the business, it's like a 8 to 12 week presentation where they've gone to something like the CBOE and download a bunch of cookie cutter charts. They're going to teach you super basic stuff that you might as well have just gotten on YouTube for free. And then they go charge 10, 20, 30 grand for it. That's not what our program's about. So it's a one-time purchase. It's a weekly webinar every Thursday. It never ends. There's bonus trades. The content's far more interesting and unique. Nothing is stolen from just, basic super basic tutorial guides on how to buy a call option or something like that. Tony says, did you read the United States Strategic Approach to the People's Republic of China? I'm not sure if I've read that specific piece, Tony, but I have digested quite a bit of information. Send me that link. I'll let you know, and I'll certainly read it. Mark Stoley says the USD CNH is tradable at Owanda and not subject to CCP rule. Okay, very good. So that's a Forex model to trade that currency. How liquid is that company, Mark? Are they pretty well endowed? So the difference between futures and Forex is a good thing to point out. Forex is like a whole bunch of little marketplaces that are not interconnected. And so there's opportunity to go arbitrage between one broker dealer and another, and is very normal. The futures market's all clearing in a centralized location and is guaranteed. So I much prefer to use the futures market to short CNH because of that, and because of how illiquid that currency is. Whereas the Hong Kong dollar is much more liquid. And again, we can get a very reputable institution, which is TD Ameritrade, to take the other side of the trade. So we have a wealthy other part of the trade. Okay, Awanda is a very reputable US company. Okay, very good. Well, that's another great way to take the same trade. Craig says TradeStation has futures. Okay, they're going to need the Hong Kong exchange. Okay, very good. Keep the questions rolling. Okay, so let's review our positioning. We dumped our VXX puts, made a tiny profit. We now have the 7/17/2020 225 QQQ put. I believe that's up slightly this morning and is still a buy. Now this is a relatively small position. My canary in the coal mine hasn't died yet, so I'm not ready to really get too aggressive with that put. We already have quite a bit of put options and bets that will profit if the market goes down. Ed Portman says, if the Hong Kong trade is so good, how can TD Ameritrade make money taking the other side? Yeah, so TD Ameritrade has been milking profits on this trade for 4 decades because it's never broke. So the cost is the swap cost. So it's going to cost. What's been the swap cost lately? It started off at 18 cents. That's been going up a little bit. And so we'll take a lot of time to discuss that. But the swap cost per mini contracts below 25 cents per day. So to have the position open, you have to pay that swap cost. And that's how all the people involved make money on that trade. Now, if the Hong Kong dollar went to less than a penny, we could make more than 100-to-1 return. So it's really quite a bad situation if Hong Kong does lose control of their currency. It's probably the most extreme volatility play you could possibly put on the market at this point in time. Okay, so we have the QQQ put. Okay, Mark says TD Ameritrade's probably not taking the other side. They're making money in swap costs. It's more likely a big bank that is taking the other side of the Hong Kong trade. That's right. But if the other side gets margin calls locked out, then it gets into a tricky spot. TD Ameritrade will try to find another person to take the trade. But if they can't, then they really cannot give you a clear answer. Depending on which agent you talk to, they will say, well, this has happened in the past and we were able to make clients full on their profit, but we can't guarantee it. And there's a risk that we may close your position out. So that's the biggest risk on that Hong Kong trade, is really the risk of the counterparty going insolvent No, we don't need a stop on the Hong Kong trade. It would be suicide for Hong Kong to strengthen their currency against the dollar. So I'm not worried about that. They've got enough problems to just keep it as a peg. In fact, if they started to strengthen their currency, I would get very aggressive with taking the other side of that. That would be absolutely ludicrous for Hong Kong to do that. Okay, so let's look at the other positions we have. This remains our favorite trade, the TLT. So I was expecting some volatility this month, which is why we bought the 529 put to protect the position. The big idea is that the bond market has a huge increase in supply. This increase in supply is potentially greater than the immediate demand. So the short-term reaction is yields go up. At the same time, the Fed is signaling they will not support the Treasury market at this point in time. So they've shown this by reducing the QE from 75 billion a day down to 6 billion a day this week. And I'm going to bet they go to 5 billion next week. And so if you stop and think about it, your immediate reaction is, oh no, TLT is going to crash. But it will only go down until it causes investors to be attracted to that yield. And the second it gets to that attraction, that's when the stock market starts to take profits on this really historic, insane move in equities, completely driven by the Fed. And we can talk about what the Fed did and what they're not doing now. And so that's the point, is that the overwhelming force of the bond supply spiking yields is what we want to cause a stock market crash. So I challenge you guys all to go look at 2018 in October. Yields went up too high, stock market tanked. So that's exactly the initial reaction to a huge jump in supply. So this is our favorite position. Again, if we think the government's going to be blowing out deficits and growing its debt, the only way the investors make money loaning the government money when yields are this low is for the yields to go even lower. So the play here is loan the government the $3 trillion in the next 3 months, sit back, wait for the Fed to do a new round of QE, and then sell that treasury for a profit. So we're not trying to make a yield from the interest. We're trying to flip the bond for a profit and loan money to the government. So that's the big change that has happened, is we went from the Fed printing money to fund the government in the short term, buying T-bills, to now the government's not doing QE and we're trying to sell this debt into the world market. So that's why I want to be betting that these investors loaning the US government $3 trillion in the next 3 months are not going to do it at a loss. Okay, Dean's out of here. Thanks so much, Dean.
Bye, guys. Have a wonderful weekend. Enjoy it. And if you're on a trial, you want to learn all about the bonus trade. Once you pick up a basic or a pro membership today, you will actually get that access to jump into the webinar this afternoon to review the Hong Kong dollar trade with Jason. So thank you, guys. Appreciate your time. Enjoy the long weekend, and we will see you in the boot camp webinar if you do upgrade.
Very good. Thanks, Dean. Kathy says, thanks again for sharing prices. It saved me because I accidentally selected the September contract for GDX, but the price was so much higher and I went back. Very good. Okay, so bond market. The fireworks are coming. Highly confident this is where you want to park your cash, not just for the next few months, probably for the next few years. The only caveat I have to this is really 2 caveats. So number 1 is I am anticipating learning from the lesson, right? So what caused the stock rally in the face of 38 million people losing their jobs? Corporations are estimating earnings are going to crash. You know, why on earth is the stock market going up? That is really the big question that most people don't get. And it was because the government pushed a 2.4 trillion stimulus bill and they don't have the money. The American government is broke. It's been broke for a long time. So where did they come up with the cash? Well, they didn't sell it to anybody. What they did is they issued T-bills. JP Morgan bought it, and then JP Morgan immediately flipped it to the Fed. They're not supposed to do all sorts of things they're doing these days. But that's how we quickly got $2.5 trillion to the US government so we could go try to keep the economy alive. They're just trying to buy some time. So again, I compare the state of the US economy to one of which is similar to a cancer patient. The cancer is alive and growing. And what we did was nothing short of a steroid shot. So you feel better for a little bit, but you really haven't fixed anything. So what are they trying to do? They're trying to get trillions of dollars to US government. They want to finance this to foreign investors, mainly central banks and huge banks, hedge funds. They want to go plug the holes in the ship. They want to get the labor force back to work, and they want to get the show back on the road. And that's how we fix the economy. So far, what did we do? We made the stimulus, we got it passed to quickly get the cash to the government without crashing the credit markets, which were already crashing as they're trying to do this. We simply printed the money. In effect, that caused stocks to go up because it essentially let $2.5 trillion out of the bond market. And they, if you're selling a bond, you're not likely to go buy a bond right back, right? So when the Fed allows people to take profits on bonds, what are they going to do? Well, they're probably, if they're a big central bank and they just lost 30% of their nation's wealth because the stock market's tanking in the face of the greatest financial crisis in the last century, maybe in the last millennium, well, they protected their stock position. Okay, but that whole effect is gone. So now we have to go sell those T-bills and get them sold at a longer duration. So that's the big picture coming into the markets now. So TLT is our favorite play. 40% of our capital is in this position, 200 shares per 75,000 in the total portfolio. And so we're talking about caveats. So initial reaction, I'm expecting volatility until it snaps the stock market for the reasons we just outlined. But then after the market's going into the next leg down, after we have multiple cities having to go back into lockdowns because the virus continues to spread, which it certainly will, because we don't have a vaccine this year, that we're going to have to do another huge stimulus bill, and that they will pass that while everybody's in a state of panic, and probably nobody will know what the hell's in it, but it's going to be bigger than the last stimulus bill. And I believe that's when the Fed will come in with the next major round of QE. So we're done. They're claiming they will do QE before negative rates. So we'll see how that all works out. But the next time to essentially predict the TLT is going to top out for a short period of time and to put some investment into inflationary products like gold, or perhaps something like Moderna if we thought they really had a shot at a real vaccine. There's a number of ETFs I like, as you guys know, related to the crisis at hand. That'll probably be the next opportunity to buy stocks. Okay, so that's the best position until there's a huge stimulus bill, and we'll want to wait for that to get passed to predict the Fed will come in with QE. And I believe that will be happening as the TLT is going higher and stocks are going lower. Mark Stoley says, is there a for dummies or other basic level tutorial? Video would be great on the relationship between the Treasury, the Fed, the banks, and how T-bills, bonds, and money printing play out in that relationship. I know you explained a lot, but a specific study guide that can be referred to on my own would be great. Good idea. I should really do a whole boot camp module just on that, Mark. I'm not aware of that type of a tutorial, but great idea. And I could certainly dedicate a whole boot camp easily to that. Complete with pictures, please. Okay. Well, we'll get Victor to work on the drawings there. He's an artist. Okay, So the next position is 300 shares of USO. Now, if you bought this the day after me, you lucky dog, you're doing quite well with USO. For original members, we're getting close to our break-even point after we've paid off our put. So that's behaving very nicely and remains a long position. Now, I do want to point out TLT is a highly deflationary product. So if you think prices are going down, that consumers are going to save and not spend because they're scared about their future, then you want to own the TLT. Now, normally you would want to own USO in an inflationary period because you thought the price of oil was going up. So that's not exactly why we're playing USO. I believe USO is already overshot to the downside and is really disconnected from its fair value, despite being in an inflationary period. So we're looking for a quick opportunity to profit from USO. My profit target is around $60 to let go of those shares. So we've got a ways to go. And we can take a look at the analysis of that in a moment. But this does remain a beautiful hedge. One is deflationary, one is inflationary. But in the current environment, I can easily see both of these appreciating. Now we do the married put strategy. So we have put options under our core assets. So the 529 161 TLT put is protecting the TLT. Also, Gary, are you out there? I am still checking in, but I do think you will need those put options actually in the exact brokerage where the shares are held, unfortunately. So that is the update on that. It looks like if you didn't have the shares, you would be put into a short position, so it wouldn't provide the same value, the exact same value at expiration at least. Now, if we were to sell the put before expiration, it would provide the same value. Okay, so you want the married put. If I'm completely wrong, the economy recovers immediately. The Fed decides to pay for all of the $3 trillion in deficit, just keeps doing QE, then TLT could crash. A lot of people ask me, why doesn't the Fed just keep doing QE if it fixes all the problems? Well, the bond market, again, is predicting deflation. So if the bond market thinks there's inflation, they're going to get very upset. And so the United States risks the $16 trillion it has sold in external debts getting very grumpy if they overdo quantitative easing, because quantitative easing is hyper related to inflation. So if they did too much QE, it could make the bond market implode on itself. So the Fed could do QE and just buy the entire bond market, but its balance sheet would go from 7 trillion to 23 trillion if they scared off all of the investors and try to do the yield curve control. So they're doing a fine balancing act right now to try to keep the bond market solvent and happy and keep the job market alive by keeping the stock market alive. And again, it's more lucrative overall to allow stocks to sell off, put the heat on China, sell your $3 trillion in debt, and then pass a new stimulus bill and do a new round of QE. So didn't anticipate the obviously that bounce we've just gone through, but now we can see their little plan, and I believe they will repeat it coming into the election. Now, the other catch is, what if the Democrats want to pass a bunch of things that the Republicans don't like and vice versa, and they fail to get that new bill passed? And if that's the case, then stocks are quite doomed in 2020. So that's why your SPY puts have much more duration, is really, if we can't get a stimulus bill passed, then we're going to have a lot of trouble. But that's one thing that you really can count on. They might bicker in front of the TV and put up a good theater, but at the end of the day, they're quite good at spending money now, aren't they? Especially when no one's looking. Okay, so USO, you should be protecting your position. That's now, let's see, USO is trading at 26. So you're going to have $6 at risk. Your put's gotten much cheaper. This trade's looking quite nice now. And so I haven't moved up that strike for new people. But if you're old, again, if you already own the $4 or $2.50 strike puts, you do not need this new put option if you bought it before the split. So you're 100% covered unless you're like Gary and had the puts in different places. So if we were to sell the put before expiration, Gary's fine. But if we were to try to get the maximum value out of our put at expiration because the trade went against us, then you do need those two in the same account. So in general, what I'm saying here is if I'm wrong and USO goes to say $5 on January 15th, then I will get $20 a share and the broker will take my shares out of my account and I lose the cost of my put, but I get $20 a share. So that's the beauty of the married put. Now, the put option is not going to cover 100% of your drawdown in the while it's open. So you would have to literally hold it to expiration and take no action for the married put to pull that off. Okay, let's look at our GDX options. So we're no longer endorsing to buy GDX. Little caveat on that, they have been playing with the money supply. And I actually was a little bit fooled in the last reading. I'll show this to you guys. So typically I like to look at the average balance of the week and compare that change. So this is really the key to predicting inflation or deflation right now. And again, we can create temporary inflation with a dramatic, aggressive increase in the money supply, which is what they've been doing. So I tend to watch this average increase. And let's just look. So we went from 600 billion in a week of added balance sheet growth, went from 5.8 trillion. So previous I was at 5.2. The next week it went up 393 billion, pushing it to a balance of 6.1 trillion. Then 228 billion, pushing it to a balance of 6.4 trillion. 255 billion, pushing it up to 6.6 trillion. A much smaller, so you can see the QE is dramatically decreasing, 146 billion, 6.7 trillion. I mean, that's a size, that's bigger than Warren Buffett's entire equity stake right now, just to give you a feeling for the magnitude of the buying that's being allowed. This is what was alarming. So they dropped the print to 66 billion. Then they did a 78 billion print. But here's where I was a little bit fooled. So the average increase week over week was 78 billion. But apparently on the last day, they threw in an extra 150 billion. So it went from 6.8 to 6.9. So if we look at the week over week closing balance, this was a pretty dramatic jump. And it wasn't in the form of QE treasury purchases. So for us to be predicting that gold is going to have a tough time, we really want to see the growth of the balance sheet slow down here. So we'll see that today at the close, and we'll see if that's slowed down a little bit. But the treasury purchases, which we're mostly interested in, have indeed gone from 75 billion a day down to 6 billion a day this week, and continuing most likely to be decreased. So we'll see if they do continue to decrease that. I expect they will. Because that's what the bond investors want. They want to know that everyone has to buy and hold the bond and to derive that profit. If everybody can get out and go buy stocks because of QE, the exact opposite happens. Another tough thing is that a lot of other central banks, which are potentially insignificant compared to the force of the Fed, are still putting a lot of liquidity into their bond markets. So today's trade is to buy that 35 put. And again, if I saw, so we didn't tell you to buy GDX today. If you don't have it, wait, if we see today that they're still aggressively growing the balance sheet by hundreds of billions of dollars, even though it's not in the form of buying treasuries, we're quite likely going to have to think twice about not having new members buy GDX. So I'll have a better idea of that come tomorrow. But again, my little canary in the coal mine is really Bitcoin and GDX as the weakest assets that are inflationary. So very correlated to stocks. We're showing some weakness this morning. And if that continues to deteriorate, I believe we'll get a little more aggressive with essentially betting that bonds go up and stocks go down. FXI, we now have 20 puts instead of 10. Same strike. So this is a nice size position and my favorite for the pro portfolio in terms of playing the geopolitical scene. Harriet says, what's a good price to pay on the GDX put? I think everybody's getting in just over $3 today. So between 3 and 320. Okay, now here we have our positions on hold. Don't enter, but don't sell for older members. So we're still long our put options, which we bought literally the day before the Fed came in with that 600 billion print per week. So that definitely was not good for our put options, but I do want to point out we have a lot of time on these puts. And in the 2008 crash, it was just 5 trading days that delivered most of the losses in a period of a year. So plenty of time for these to go back to our direction. Harriet, no, I am saying buy the GDX put today, yeah, but not the GDX itself. Now, I haven't told anybody to sell GDX if you already have it, but if you haven't bought it yet, I'm not telling you to buy it today. So our put options are still on a hold. In the pro strategy, if you have these USO puts, those are still a hold. We have these TLT call options, which are still a hold. I expect to sell those soon and move up the strike significantly. And GDX shares are still a hold. We just have not put those as a buy today. Yes, Ram, I would buy the puts even if you don't own GDX today. Yes, sir. And depending on what the Fed comes out with at the close today with what they've done with their balance sheet growth, I'll either recommend you add those if you're missing them tomorrow, or just let you hold on to your put option. If they're not growing the balance sheet and they're just letting it flatline, that'll be very bad for inflationary assets like gold. Okay, let's see how our portfolio is performing. And remember, you guys have live access to this every day. So our drawdown is in April, but I want to point out that these are something like a long-term insurance policy we've picked up in April, right before, looked like the old patient was on the verge of croaking. So again, it was unfortunate that literally the day after we put those puts on, the Fed came in, but it was prudent that we bought 2 years of time premium. So if we did cost average out that investment over the period of the duration of the puts, that drawdown's really nothing to be worried about. May we're up 1.2. I expect that to get better into the close of the month because we're in a very defensive strategy, and it does look like the tides are changing finally for our strategy. So we're up 1.2 in May. We have a drawdown in April, but keep in mind that has 2 years of time premium. It's something like owning insurance. And again, a much longer term investment on that position. We did well in January, February, March. Missed out on taking some profits on that TLT didn't expect central banks to literally have a liquidity crisis on a systematic global scale. So we missed out on pulling some of the profits in March. But all in all, the general markets had volatility of 33% in the first quarter, only to whipsaw back up. And I do believe it's going to whipsaw right back down. This will be a very difficult year for investors. And when you compare us to really anybody else out there, I'm quite proud of these results. I know it's weird to say we're proud of a 4% drawdown in 2020, but considering the events that have occurred, we're doing quite well. And I'm highly confident in our positioning, especially having weathered really the storm against us. I believe that is over now. Okay, so Florian says, just to clarify, the puts. Florian, do you own GDX? Regardless, it doesn't matter if you own GDX or not. I'm recommending you buy that put option today. And tomorrow I'll let you know if you should add GDX or not. But yeah, it's a bet down on GDX. Okay, good. So yeah, that's a trade I would recommend. Joe says I have 1200 VEX. So is that GDX, Joe? But yeah, you want to own 1 put per 100 shares of GDX. Yes, sir. So you'd buy 12. And you already have the 28. So I'm not having you sell that 28. That's going to allow us to hold that position. And if we do get a sell-off, which I believe we will, we can exit the puts and remain long GDX, as the long-term outlook for GDX is beautiful. It's just trying to get through this deflationary period where everybody is losing their job, saving every penny, has an uncertain future. Their consumer behavior has been dramatically altered. And here's your buy and hold portfolio, has not budged, did not change. Marlene says, are we supposed to have 7/17/2020-25 put in our portfolio? Oh yeah, I need to add that to the summary. Good catch, Marlene. And my apologies. Oh yeah, it's right here. Good, didn't forget. So I think we're up a little bit on that from yesterday. Let's see. So we're up 15%. I haven't closed out my track record for the VIX puts today yet, but I will after the trade alert. Yeah, Marlene, I would buy that today. Yep. Yes, so it is looking like the tide is changing here, Marlene. So I would put that position on today. Okay, let's look at the news. The data is disturbing. Extreme option sentiment flashes red. This is a good article you can click on. They have compared big positions against small positions and says that small traders tend to be really the momentum traders. Whatever they saw in the last week, they want to continue. And so that strategy tends to not do well. Usually big investors do the opposite. They will buy a position that's going against the trend, swallow some drawdown like we've been doing, and then come out the hero. So clearly I'm more on that type of a strategy. Although our VIX puts were clearly a momentum trade that helped us offset some of the drawdown in the last few weeks. In this trade, you'll see, in this document, you'll see that small traders are loading up on call options and the bigger positions are doing the opposite. The Fed minutes, very important to read every quarter. I haven't read it yet, but I will be doing that. We'll probably have a whole boot camp just about how to read these at one point, but right there. I have read analysis and summary of it. So they're talking about how they'll never do negative rates until they've done this, 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 and this. Although everything they said they wouldn't do, they have done in short order. Could go through that history. In fact, this document below will summarize it, but mainly what they're talking about is different ways of doing QE because they've already pushed rates to 0. So good overview, but again, it's not that they're going to do QE now, it's more that they'll do QE in the next crisis. And the overall sentiment of the government is that we've just put in the potential for 6 trillion in credit. Let's use it before we pass any more bills. So now they're focused on selling the debt to real investors, not just deflating the dollar. Somebody is dumping everything. Here's an article about a real estate ETF dumping 33 million, a huge position, something like 5% of the total assets in this ETF. It was up on the day, so interesting. We don't know who the seller was or who the buyer was, but that's like a Warren Buffett-sized trade. And the commentary was, something's going on and it's big. Here's another article talking about the FOMC minutes. That's where they discuss what their intentions are for monetary policy. Harvard Medical School professor questions Fauci's shading vaccine results. So the critique is, they didn't give us any of the data on the Moderna test. And apparently a few people got quite sick. So not a lot of data out on that. We don't know when they're going to really put it to the test. The Oxford study actually tried to reinfect a monkey and it failed. So we've never been able to create a vaccine for a coronavirus. So it's quite questionable, if we will, this time. And although Moderna has something like 10 vaccines they're working on, none of them have really been put to the test. I think they have something like 4,000 people trying these random different. Also, the Gates Foundation was one of their seed investors with $90 million. So that's interesting. But his big critique was, why aren't we testing hydroxychloroquine with a real study? Why is all the attention on these pharmaceutical products? And why aren't they sharing the data before coming out and pumping up Moderna and then doing a issuance? So he's calling it nothing short of criminal and questioning their intentions. Now, the technology behind Moderna is interesting, really interesting. So I'll be tempted to buy call options on it ahead of its, so it's doing a phase 3 trial. It's not clear. You can't figure out when they're going to actually try to reintroduce the disease to people getting the vaccine. But we do know they're going to go to a couple hundred people right now. That's already in play. If that works out well, starting July, they'll do phase 3 with thousands. I can't find anything that talks about when they're going to actually try to see if it works, just if it gets you sick or not and creates antibodies. But it could be just so much more complex than just blocking a single virus. What could be happening is a whole pack of viruses are taking out your immune system. So this is a trade I like in terms of its technology, the hype, the pump and dump aspects of it. And I do think once we do get a big crash, with enough research, I might be tempted to put instead of IBB specifically, I might be able to handpick the best pharmaceuticals for us because I've put so much time into this research. So this does look really quite interesting, except that the CEO has been dumping stock as fast as he could all of this year. He has a LLC that has a huge position in it, which has been dumping stock all year. They're not providing all the data. Supposedly they infected a mouse and then reinfected the mouse with the disease, but there's no data. There's no data. That's the bottom line, is we have no data. They went and pumped the stock up, pulled $1 billion out of the private equity market, or out of their private offering. They took a couple $100 million from the US government. So, but definitely there is a lot of attention from a lot of powerful people coming right to this vaccination. So could potentially be a massive return if they do create a vaccine and we have the right positioning on it. So do expect the potential to see that play again after the whole market's been repriced. direct observations of repeated infections with endemic coronaviruses. So just a couple of years ago, they did studies on coronaviruses and to see if antibodies work. If you get the common cold, will you get it again? The answer is yes, multiple times per year. So that's not good. How can I be sick? Wisconsin woman who took hydroxychloroquine for 19 years to treat lupus still got the disease. So if you listen to Peak Prosperity, he loves hydroxychloroquine. I was skeptical at first, but there's more and more data coming out. And he was looking at a huge group of people with this lupus and how very few of them had caught the COVID-19. And was it because their body has an autoimmune disease, or is it because they're treating that disease with hydroxychloroquine? So any anti-hydroxychloroquine data, I would be skeptical of the author, because what I've found is it does seem to be highly effective before the infection has really gotten grab of your immune system, and could make a huge impact. Now, especially the media is attacking this. And again, these media companies by and far have interests in the pharmaceutical companies, either because of their owners or because of their ad revenue. So this is a good video you can watch. If you go to this page in your trade doc, you can click on that link. China is reporting new outbreaks and mutations in the virus. The change seems to be that it's getting sneakier but less deadly. So it's sitting in the victims for weeks with asymptomatic results, so that nobody knows they have it, but they're out spreading it. But China, again, I take with a grain of salt and even sometimes assume it's being used as propaganda. So we're trying to open up our economy. China really was bragging how great they were to get it open so much faster and efficiently than we are. And now, right when we're trying to get back to opening our economy, we can see the two political teams of China and US going straight at it. And now China's, suddenly having a new outbreak. So Ford temporarily shuts down 2 plants just days after reopening, after workers test positive. Companies are going to have a hard time getting back to work because it's not safe. And the meat plants are really getting hit hard. So will this potentially be the period where we have food shortages? This is a very good article. Fed finds cozy connections nationwide between China and university professors. There's some 12 professors now that have been arrested related to their involvement with stealing technology and pushing it over to China. So this is probably some of the most, and especially the Harvard scientist whose specialty was in nanotechnology, which is precisely what they believe is related to the current novel coronavirus. China condemns grave US interference in China's internal affairs. So that's talking about Taiwan. We're giving Taiwan lots of military support, and China doesn't want to recognize them as their own country. Same as Hong Kong. China's trying to expand its borders. Here is a couple models predicting that the death count's going to skyrocket it back up as global economies reopen. Unfortunately, I think it is inevitable. We can't afford to remain locked down. So we have to get back to work. We were not able to get the testing in place to make it safe in time, nor get the equipment, the protective equipment. So I'm not quite sure why. Perhaps it's just not possible to get it quickly enough. But without doubt, if we remain locked down for much longer, you'll have a civil war breaking out in America. And again, China, nobody votes. President Xi's the leader for life. In America, you have to give the people what they want, otherwise they don't vote for you. This gives us a huge upside battle to fight this relative to a dictator ruled country. Facebook hits all-time highs yesterday. Millions of Americans are skipping credit card and car payments, as well as rent. So the banks are just really on the line for all of this foolish expansion of credit they've done. So will we let these banks go bankrupt, or are we going to bail them out? I bet we bail them out. Florian says so we don't need the put options to be in the money to make money, Florian. So that's a good question. But I don't want you to think it has to be in the money to get a profit. This was an interesting study showing if you sneeze or cough and there is wind at 5 miles per hour, the air droplets can travel 18 feet in 5 seconds. 6 feet's not enough. Just shows how hard it is to contain this. There's really no chance a restaurant can safely reopen. Just not possible. Not inside, at least. Thomas Thornton, I have a lot of friends who love gold. He nailed it with this yesterday. Don't hate me. I just shorted GDX. It's down 5% today. I was hoping that we would get another pop today before we bought our puts, but day late. It's okay. Did well on the run up on it. Extreme behavior is on display everywhere in the stock market. Record high exceeding the week of February 14th. So anytime you have extremes like this, it's typical to see the reverse happen right after. UK mortgage payment holiday set to be extended. Just 1 month of missing mortgages on a country scale is going to be devastating to their banks. That's why they're pushing rates potentially negative. Oh, this is a good one. So this is showing the Chinese imports by product type. And so you can see where they're supposed to be. And on agriculture, manufacturing, they're not even close. So there's no argument that China currently is making good on its trade deal. So we'll see. Are they going to try to push China to buy a bunch of stuff and delay escalation in exchange for letting Huawei keep getting semiconductors, which again, cutting them off of our semiconductors will hurt Huawei, but it'll also hurt American corporations. So it's a tricky situation we're in. And maybe China wants the trade war to escalate. It certainly seems as though they do. Another interview with Pompeo about firing the State Department Attorney General. And more bashing the Chinese government. Massive Florida block party defies social distancing. So I only post stuff like that because it indicates that we're going to be spreading the virus. Jeffrey Gundlach, 30-year treasury yields seem as anxious to break out to the upside, which means the TLT would go down, as a rodeo bronc waiting to buck out of the chute. Fed's getting clear they want to keep the bronc in the chute forever. Can they? We'll see. Surely they won't last the rodeo 8 seconds if the gate is open. So the gate is open right now. They're only picking up 6 billion a day, and I believe that will go down. That's actually exactly what I'm anticipating, is a small spike in yields will cause a dramatic shift of capital out of equity markets into bonds. That's why we bought that longer duration put option this month, as we knew this initial reaction was coming this exact month. JC on a Bike has a great post about Alina Chan and Peter Daszak. This is one of the first virologists coming out and saying, wait a second, you cannot say this has no chance of being man-made or cultured in a lab. Haven't had a chance to read her exact report. It also critiques Peter Daszak, who's in the business of writing grants, funding these different virology labs, and trying to defend really that this is not something that gain of function study caused, and protecting his industry. And so he's saying something like, if the plumber said your pipes are about to break and he needs to go reroute the whole thing, would you really trust the plumber with that analysis? Probably not. And so he's the guy who makes money doing this research, saying that his research has absolutely nothing to do with the problem we're in right now. And again, that's becoming more and more clear that indeed, we can really see how they made this virus. Here's the actual Alina Chan article right here. And her point is that this mutation, well, it's a big detailed report, but it just makes absolutely no sense. You can go look at every bat virus we've ever found in history, and none of them have a insert that is unique to the SARS-CoV-2, which is only found in other related viruses that are not bat viruses. So that's one. And then two, starts talking about how, how is it possible that these can jump from humans to cats to ferrets? That's not normal. And it is well known that ferrets are where we like to test these viruses on because their DNA is so close to humans. So it looks like potentially, well, I'll let you guys read that if you want to. It's a big article. Henrik has been having a fit during this QE period. If fundamentals matter, SPX is heading to 1800. If technicals matter, SPX is heading to 1800. If history matters, SPX is heading to 1800. The Fed is trying for them not to matter. Okay, but again, the catch is if the Fed does too much QE, it creates inflation, the bond market pukes itself, and there's $16 trillion that is on the line. And again, any hikes in yield would cause that entire base of debt to potentially want to sell. And that's at the same time the US needs to sell $3 trillion in deficit in the next 3 months. So most likely they will maneuver the markets to ensure that does not happen in terms of yield spiking because of QE. Probably a good time to remind folks that when the Fed tried to draw down a mere 20% of their balance sheet, $800 billion over the course of 2018, it nearly led to a meltdown of the financial system at year end. And this was in Bostic. Solid recovery will bring contraction in the Fed's balance sheet. So they're basically going to let all these T-bills they bought roll off and then use the roll off on that to support other markets. So I think we're going to see the Fed's balance sheet not decrease, but maybe just flatline here as they let these T-bills roll off and get them sold into longer term duration. That's not in our books. U.S. Senate passed legislation Wednesday that could ban many Chinese companies from listing shares on U.S. exchanges or raising money from American investors. As part of the Public Company Accounting Oversight Board is unable to audit specified reports because the company uses foreign accounting, which is not subject to inspection by the board. So again, the Chinese government says that's state secret. You can't audit any Chinese company. Fed minutes, respondents to market desk survey discussed in April meeting. No probability of implementing negative rates. Of course, everything they've promised us, the exact opposite has occurred. U.S. Senate passed, they'll probably only do that if we fail to make a vaccine. And again, we're going to see if Moderna's vaccine works sometime in probably September. So if they give it out in July to 10,000 people, and again, they haven't discussed reintroducing the disease to see if it works or not. So I need to spend some more time listening to their last earnings call and try to get more details on that. But this year, we should know if the most advanced technology for this, which probably has the best chance of succeeding, Moderna, if it works or not. And if it doesn't, then we have a long road ahead to reach herd immunity. Okay, let's see. Senate's slowly passing laws to ban Chinese companies, so that's coming down the pipeline quite quickly. This fellow, good news, reinfection is unlikely. So there's a lot of scare on the USS Roosevelt as well as the South Korean data that people are getting reinfected, indicating that who knows what exactly that could have really meant for people catching this. But it came out, and there's two people I respect that analyze this. And the way they test for the antigen is picking up little pieces of the RNA. But for the virus to really reinfect you, it has to have the whole thing, the shell, the spike proteins, and all that. So it looks like we're just finding dead pieces of the virus floating around in the system weeks later, and that can take 60 days. So that's really good news, and it would indicate that if you do beat this once, you should be good for quite some time. So that's really quite encouraging. The most encouraging data on that yet. This is another good peak prosperity video, and goes over the lack of reporting on hydroxychloroquine. A lot of good stuff in that one. So very good video on that. I would highly recommend watching his video daily for the best summary of what's going on in the coronavirus. Substantial majority of US listed Chinese firms committing fraud. This was on Bloomberg, which is curious. Is Bloomberg getting cut out of China? I would be shocked, but Bloomberg has great ties to China. So to see them bashing China on this interview is interesting. Senate GOP won't address relief until June. So again, they don't like the bill the House passed. And again, they're all coordinating. They got to sell the stimulus we already passed before we go pass more stimulus. Here's the follow-up video from MedCram related to reinfections and relapse. So if you want to know the science behind it, that's a very good video. Monthly equity put call ratio is one of the lowest on record. This is one happy market, just shows a extreme amount of put option buying relative to call option. China is on a massive disinformation campaign because they are desperate to have Sleepy Joe win the presidential race so they can continue to rip off the United States as they have done for decades until I came along. And China replied, on the contrary, Chinese netizens wish for your re-election because you can make America eccentric and thus hateful for the world. You help promote unity in China, and you also make international news as fun as comedy. Chinese netizens call you Zhangguo, meaning help to construct China. We're concerned that around the world, individuals, including journalists, have been arrested and detained based on their public statements or activities regarding the virus. The United States condemns all such use of pandemic around the world as a pretext for repression. Pompeo's been banging that war drum for about a month now. Now they're saying it's Fang Man. So you have Facebook, Amazon, Google, Microsoft, Apple, and NVIDIA, extremely leveraged stocks, are now the safe haven. That's why we bought that QQQ put. Expect that the velocity of selling in this group will be greater than its peers because it's been treated as a safe haven due to the QE, which is absolute insanity. Read this top to bottom on Fed. Negative interest rate policy is NERP. So first cut to zero, they did. 2, do QE, they did. 3, other swaps, that's where we're at. So they've created all sorts of different access to capital. 4, they're talking about forward guidance. 5 would be yield curve control. Light, that's what they have really already done on the T-bills. Now they're saying they would come in and protect the full curve, which would be heavy. And then the last would be negative interest rates. Spokesman speaks stupidly on behalf of China, trying desperately to deflect the pain and carnage that their country spread throughout the world. Its disinformation and propaganda attack on the United States and Europe is a disgrace. It all comes from the top. They could have easily stopped the plague, but they didn't. War Room episode 21 with George Webb. These two have been tracking this since January. Always good content. Sometimes I call them tinfoil hats, but to be honest, they've been quite accurate with every single prediction they've had to date, and really leading the news on this. So a good channel to follow. I don't follow George Webb specifically, but he's also has very good insights and is frequently interviewed by this by this fellow, Dr. Paul Cottrell, who is not actually a medical doctor. He is more of a math guy. So, but regardless, I do find a lot of value in his content. Good video to watch. This is I think it's a Harvard professor. I've listened to him for quite some time talk about the history of China and their legal system. Was helping China build its post-1978 legal system a mistake. Very good video. Highly recommend watching that. And it really talks about how China needed a legal system to attract capital and how the United States came in and developed that. But now it's gone way off track from what we were hoping with President Xi. Good interview. I'd highly recommend watching that. This is a good video from China in Focus. A lot of footage coming out of China showing that there's huge lines, lots of people still getting sick. Let's see, Ethereum starting to sell off a little more, so our canary is getting a little weaker. Bitcoin's only down 4%. If we saw crypto down 10 to 15%, I'd get a little more excited. China's Baidu, that's their search engine, considers delisting from NASDAQ to boost valuation. China is on a massive disinformation camp. Okay, we read that. Kyle Bass, all eyes should be on Hong Kong. This is a good article. We'll be covering it in part 3 as it came out this morning, although I believe it was posted in Newsweek a few days ago. Really just summarizes what China is doing to Hong Kong and Taiwan, and how the United States is taking action to prevent that, and how they're on the really could be losing their special status by the end of May. In fact, on Wednesday, they're voting on a National Security Act in China that would take away a lot of the independence of Hong Kong, and thus it could lose its special status, which would mean all the tariffs we place on China and sanctions would also apply to Hong Kong. And that could be the last straw for Hong Kong. Pompeo accuses China of helping Iran's gas for gold. That's what we're talking about. So there's some big tankers coming right now. They've got fighter jets trying to protect it. Yeah, so Rick asks, can you explain the special status? So Hong Kong is supposed to be independent from China until 2047. So we've got 27 more years. We're supposed to be a separate government and have independence from China and its own legal system. And so it's this legal system that's critical for investors to feel safe investing in Chinese companies. And that's because, again, in China, it's illegal to audit a Chinese company because it could essentially reveal their power structure, who's in control of who. So it's very secretive and thus makes their government very strong. Now in this video, he really critiques what Xi did, which was jail all of his competitors and really remove any chance of anyone else having power in China. So that's just in general, people do not trust the Chinese legal system, so they don't want to invest in it. And the special status to Hong Kong is that they're supposed to be independent of China. So if they lost that independence, that would mean all sanctions we place on China would also be true for Tony says, how does theta impact your decision on option purchases? I am not using theta to impact my decisions on option purchases. Okay, Africa is having a lot of trouble with the spread of the virus. You have a picture of doctors being allowed to go back to work. 570 workers test positive for COVID at the Tyson plant in North Carolina. And this has an interesting chart where you can see how many people work in each state for meat packaging. It's alarming. It's tens of thousands in certain states. And again, they're now having a lot of trouble keeping these open. Amazon's also has now 7 dead employees from the coronavirus. So just really all companies are having a very difficult time opening operations safely. Beijing legalizes persecution of Hong Kong's pro-democracy movement with new national security law. So this is being discussed tomorrow and potentially passed on Wednesday, and could potentially cause the US to revoke Hong Kong's special status. So very good for your Hong Kong trade. Okay, guys, so that is a review of our trading plan and all the top news. I'll go ahead and take questions until the top of the hour, and then we're going to take a 1-hour break for the boot camp. And to be generalized, Tony, I try to buy options when the volatility index is low, and I like to try to time selling them with half my time premium. And in general, I'm trying to target that my strike is about halfway from where I think the end price can go. So there's a really good boot camp, multi-hour, 4-hour presentation on how we optimize our option investments and how to get the maximum return on options. So I definitely recommend watching that. In fact, Mark Stoley said he's done a lot of options courses, and he'd never seen anything like what I had put together. Yes, Craig, we got rid of our VIX options completely. So the vote is on China invoking a National Security Act, which would essentially just override Hong Kong's laws. Right, so options have time premium, and you lose that time premium over time. That is correct. But let's say I thought that it's going to take, let's just say we had a stock that was trading at $10, and I thought in the next 30 days it was going to go to 20. To make the maximum return, what I would do is buy 60 days of time premium, and I'd buy the 15 strike. So I'd want it to go into the money by 50% of the total move and have 50% of my time premium left. And that's how you can just bang out the maximum profit on an option. Now, do I have a magic wand that's going to tell me exactly when things will go to a certain level? No, I can't control, when the Fed's going to, why didn't the Fed do 600 billion of QE the week before we bought our puts? Tell me that. So there's things that we can't anticipate, but we can react to. And I think that's critical as an investor as we adapt to a changing environment. Yeah, so I would watch the boot camp tutorial on options, but I show you with real data that to get the highest return, if you thought, a lot of people are really, there's multiple strategies for options, okay? But if I'm trying to do a speculative option trade and nail a massive return with a tiny amount of capital, here's the formula to get the maximum return for your investment in a safe manner. So if I thought it was going to take 30 days for asset to go from 10 to 20, I would buy 60 days of time premium, and I'd buy the 15 strike. And you'll hit the maximum return selling that at the 30-day mark when it hits 20. So you buy the 15 strike, you buy twice the time premium, and you're going to just knock it out of the ballpark when those line up. Now, is it easy to get those to line up perfectly? No, but when I'm calculating strikes and expiration dates, just know that's exactly what I'm doing. I'm trying to anticipate where it could potentially go based on that. Now, do I think we're going to be below the June 19th strike after the Fed came in and delayed the timing by 2 months? Probably not. But do I think that we should sell those now? No. We want to sell it when the VIX is spiking regardless. And also, I do want to point out this single highest return I've personally seen in a brokerage account. They had 10-cent put options on the QQQ that he bought in 2007, and it got nowhere near, not even close to the strike, and he had 12,000% returns. So you absolutely do not have to get below the strike to generate a profit, because the value of your put goes up as it goes down. No, the pricing on VIX calls is such a ripoff, Rick. So I would prefer to buy QQQ puts versus VIX call options. And yeah, just go pull up the option chain. You'll see it's literally twice as expensive to buy a damn VIX call compared to a VIX put with the same distance from the strike. I'm not sure why it's so mispriced. I'll have to do more research on that. But yeah, the good bargain on betting down on the market right now is to own the TLT. That's your least risky way to bet down on the stock market with the most safety, because you know the US government has to protect its debt market. So you just have super low risk being involved in the TLT. Otherwise, government's not funded and the stock market's tanking. So if you combine the two, it's really safe. So if we bet up on the TLT and bet down on the SPY, and then we realize the government's trying to offload $3 trillion in debt, let's just talk about what would happen. If the TLT spikes, that means the government's not getting the money. And that means the stimulus won't be put into the economy, and your stock market's going to crash anyways. Now, on the other hand, if the government does get its money, the method it's going to get the money will put pressure on the stock market. So it makes a lot of sense to do both at the same time. But yeah, I like to do QQQ puts right now and SPY puts to bet down on stocks. Then for betting down on the stock market with an adjacent market, the bond market, we like the TLT. So doing both at the same time is really a good combination. But again, you can see I'm willing to put half our capital into bonds, but only a few percent at this point in put options. Much different risk profile. And in terms of betting the market will go up, the VIX put options is a good way to do that. Now, I wish I had bought those for us for the last 2 months. So we've learned from that and understand the what the Fed is doing and the magnitude of this. So normally the Fed won't come in with QE so quickly like we did this time around. But the magnitude of this was enormous and caused the greatest hedge for stocks in the world to break down. And that was in March. It was the Treasury market broke down. It should have been providing a hedge against that stock sell-off, and it did for about half the move. And then the magnitude of the crash was so enormous that it did take the bond market with it. So that's why the Fed had to come in there and support it. And the government was urging this 2.4 trillion stimulus plan. But I think that the market has stabilized enough for the bond market to behave correctly this time around. So oil's caused a lot of bankruptcies, continuing to cause pain. But now they have added quite a bit of liquidity to the markets. But you got to realize just all the US markets combined are 120 trillion and our balance sheet's at 7 trillion. So it's still at risk and highly leveraged economy. And if there was another massive sell-off in a lot of assets at the same time, we could once again end up in a dollar shortage. Marlene says she has USO puts. Do you own USO, Marlene? Okay, no. So yeah, I would only want to own those together. So we're very close to USO paying off the cost of our put and going into the green. No, I'm afraid the oil market is still highly risky. And even though USO has adapted its strategy to cover 4 months of oil contracts. If we get a huge resurgence in the virus, which I think we will, because we don't have the adequate testing nor the adequate protection to really prevent the spread. It also looks like I'd say there's less than a 50% chance that a vaccine will work, based on not my expertise, but the expertise of every doctor, virologist, and biologist I've studied, excluding the pharmacists who are, making billions trying to sling these. But when you look at the CEO, if you really thought that you were on the verge of a miracle cure, I mean, you're going to essentially cure the common cold. Are you going to dump your shares from 15 to 80 as fast as you can? No. So the guy clearly knows that this is a big what if, and it may take them many tries to get it right. So your typical vaccine is going to go beat up the old virus and inject you with it. And that's what we've done for many years. What Moderna is doing is essentially designing its own virus that is not deadly, and its RNA will go into you and cause it to reproduce the exact spike protein on the coronavirus. And so your body creates these antibodies to block the spike protein. You still get sick because your immune system's reacting to this, but it's not deadly, and your body can handle it. And so it's really a very cool idea. The problem is they've never made it work. No, Tony, I would not sell the USO puts. How many puts do you have per 100 shares? I would always own 1 put per 100 shares of anything I'm having you trade, just in general. And so, Bitcoin's broke below 9,000. That's showing some pretty good weakness there. But again, I think you'll see Bitcoin drop at least 10% in a 24-hour period before we should get any super excited. Okay, so guys, if you bought the trade before the split, it's going to be confusing. So if you bought 100 shares of USO at 350, and then you bought one $4 put, you're good to go. You're going to have less shares now, and you're going to have that same 4-strike put. But it's good to go. Absolutely good to go. It protects you perfectly. So they adjusted the options to match the USO. Now, if you bought, what exactly did you do, Marlene? Can you walk me through your purchases, what price, and etc., and the date? And I can. It doesn't have to be the exact date, but yeah. If you have, yeah, if you did it as the trailer instructed before the split, you have no change today, period. You're perfectly protected. Okay, so you have 125 USO shares. Okay, and which strike of an option do you have, and how many? 10. So the puts are worth 1/8 in terms of the amount of shares originally. Okay, so you bought 10 250 puts, and you bought, you have 125 shares today, but you got to multiply that by 8 for originally. So I believe you are perfect. Yep. So you had 1,000 shares, and you bought 10 puts. And now you have 125 shares because they divided by 8. No, I believe you're correct. So we're just about you should be just about ready to pay off that put pretty quick here from the appreciation in USO recently, which is what we want. We want to pay off the cost of the put, keep it open, and then let USO go up higher. That would be the most ideal strategy for us here. So yeah, so take your 125, multiply it by 8, that gets you up to 1,000. So you previously had 1,000 shares of USO, and you originally bought 10 puts. So you followed the instructions correctly. Yes, so the puts will provide more value at expiration if we're below where we bought the put at. So if you bought the 250 put, then that would go into the money times 8. So 16, 20. So if we go below 20, you're going to want to own those puts at expiration with the shares, and they will essentially give you $20 a share, and you're out of the trade with no action. So yeah, the puts won't perfectly protect the position until expiration. It's at expiration that those puts will provide the full value. Rick says if I have, we are going to have to cut this off, guys. I do need a break between this webinar and the next. So we'll see you guys back on the boot camp in 1 hour and back to our normal show tomorrow. So I appreciate everybody. Thank you so much. And Rick, bring that question to the boot camp meeting in an hour and we'll answer that for you. See you, Tony. Thanks, Marlene. Bye, everybody.